Well, the issue is that stablecoins can be transferred without going through banks, US banks in particular. They're transferred on decentralized, permissionless blockchains. And it's really the role of US banks in the global financial system that has given us the leverage to apply financial sanctions as a tool of foreign policy. Now, you can debate when and where we should be using sanctions. But if we want to still have that in our toolkit, it's important to think about the implications of stablecoins, and it's important to address how they're transferred and to figure out ways to make sure illicit activity isn't happening. We saw a recent report that Russian smugglers were in fact using Tether to finance weapons purchases, and there have been concerns that Hamas was using stablecoins to fund its activities. The market is still small, but it's important that we act now. And that may mean coming up with different approaches than we've traditionally used with banks and other financial intermediaries. Thing about blockchains, of course, is that there's a record. You can always see how things were transferred. But, that's useful after the fact. What we need to be doing is figuring out ways in real time to make sure these things aren't being used for illicit activity. That means requiring stablecoin issuers not only to apply the kinds of anti-money laundering protections that banks do, but also to engage in active monitoring of what's going on with their stablecoins, to have the ability and the willingness to freeze stablecoins. If they identify a suspicious wallet or suspicious activity, they can actually freeze those stablecoins and prevent them from being used. So that's one solution also. And also looking at what we call decentralized digital identity solutions, so that transactions with stablecoins can't even be made if someone's identity hasn't been sort of verified in advance. Now, that technology is new, may not be ready for market yet, but that's the kind of thing we need to be thinking about. A stablecoin, and I'm talking about stablecoins that are based on the US dollar, those have to have access at some point to the US financial system. If people thought that Tether ultimately can't be converted into US dollars because Tether was completely blocked out of the US financial system, Tether would not have the value of $1, right? So we do have that ultimate leverage. We just have to think about how to use it. And the comparison with Eurodollars that I make is, Eurodollars started out small too. And US regulators kind of were a little concerned, but sort of ignored the market because it was small. But they grew from unexpected events. It turned out well, in a sense, because they helped cement the role of the dollar. But we can't expect that necessarily with stablecoins. Algorithmic ones are far more dangerous. And I think the legislative initiatives that we've seen are really focused on the dollar-backed ones. And I think there's a lot of good measures in both the Lummis-Gillibrand proposal as well as Patrick McHenry's proposal in terms of these sorts of prudential requirements. We just need to remember that other countries are creating these frameworks too, and you could even have dollar-based stablecoins issued under those other countries' frameworks. That's why it's important for the U.S. to move forward. It's also important because we don't just want to stumble into this digital future. We want to figure out what do we need to do to really take full advantage of the digital future in finance, and to also make it fair. Things like payments, frankly, for those of us that have credit cards and mobile banking, it may seem to work pretty well, but our system is actually, it costs more, it's slower than what it could be, and that hurts low-income people in particular.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you're joining the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And we have ex-CFTC Chair Timothy Massad on stablecoins. And of course, guys, they like to throw in national security. And we know stable coins are illegal, but we know how the NWO does. The master magicians just write it on in. And because we're moving over to a cashless society, digital currencies, the only way they're going to be able to stay in control of the money supply is stable coins and CBDCs. But the fact is, guys, this money is programmable. Being able to tell you what, when, when, and how to buy, and you have 3 to 6 months to spend it or poof, it's gone. And the current sanction situation allows them to play the Hegelian dialectic to destroy fiat. We see the BRICS nations are already off the dollar as just the central banks are holding this system up until we move over to this digital economy. And everything's going to be tokenized, put on blockchain. And we know blockchain gives the NWO the all-seeing eye. And then on top of it, guys, they're pushing these NFTs because they're nothing but digital IDs. We're seeing the school system right now, a lot of them are pushing IDs. And we know those IDs are going to eventually show up on their phones, become digital. Guys, remember, it's steps, it's a plan. It moves in phases. And then we have Jim Cramer finally admitting that rates are going to be higher for longer and we're going to have a market sell-off. But guys, we know we're in a fragmented world. They have to destroy it all in order for the fourth industrial revolution to rise. The Fed and the central banks were moving in lockstep as they were raising rates and printing all this money, and they're going to move in lockstep when it comes to lowering rates. And remember, you're in a simulation for the fourth industrial revolution. But in order to get there, guys, we know we have to have plenty of distractions and a crisis. And now we have the TikTok ban. And we know it's nothing but a distraction. And we have Biden signs off on it, but still, they don't know whether they want to ban it or not. So, guys, we know this is nothing but a movie. Get your popcorn, sit back, let it play out. And remember the Cryptoteacher told you. Because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
Okay, we say cash is king when the market is so ugly that you just want to get out now. Sell. I can't endorse that here because I like the market longer term. But after a session where the Dow dipped 43 points, the S&P inched up 0.02%, NASDAQ advanced 0.1%, I'd be lying if I told you I feel great about this market. What's wrong with it? Well, earnings tonight for one, and especially the forecast, and we're going to get to those. But let's start with what I think is the real elephant in the room. Let's start with the bond market, which, of course, is much bigger than the stock market, as I always tell you, and its power bleeds into the stock market every day and has been bleeding in a bad way. How's it do that? Simple. When the government sells bills, notes, and bonds to pay for the deficit, it really weighs on everything. Consider it a gigantic sideshow that can really hurt your portfolio. Just this week, you've got a huge $44 billion 7-year bond auction. That's tomorrow. On top of today's $70 billion 5-year note auction. That's an awful lot of bond supply, especially on top of the $69 billion sale of 2-year notes we got yesterday. Talk about cash's rook. The bond market now has gotten so compelling to so many people because it's been going down that they want to buy some of these bonds, which means they often need to sell stock in order to swap out of equities and into the bond market. They have to raise cash to buy bonds. Makes sense, right? You need a lot of buyers to come in and buy these bonds because so much is being for sale. And for many, that means to cash your stocks in order to be able to buy the bonds. Now, I know that treasuries are risk-free. Terrific. And if you think that the Fed will eventually cut rates this year, well, then the 2-year, it was a really interesting piece of paper, around 5%. I bought some yesterday. But remember, I can't buy stocks. 2-year, good. But how about this 5-year note with a 4.66% yield? That was today's business. Or the 7-year yield, 7-year, which I think is going to be similar tomorrow. Sorry, to me, they are not real value. I want a higher yield going out further. Others will too. And if that's the case, then bond yields will have to move higher, price to bonds lower, okay, to bring in more buyers. The impact on the bond market and then the stock market would be immediate. In a world where long-term bond yields keep climbing, stocks will head down.
To the extent there's either a rate cut in our future or maybe even, I think you're suggesting there's potentially even a rate hike in our future, you think this is now into a 2025 event?
I still think there's a chance that the Fed could cut rates in 24. They'd like to cut rates. It would be helpful to the banks. It would be helpful to small business. And also, you have a perverse impact on rents by having high rates because it's very hard to buy a home. It's hard to build a multifamily rental project. Might actually be putting upward pressure on rents, I should say. So I think they're going to keep their options open. I think the bar is extremely high for actually raising rates down the road. but I think they're going to be patient, non-committal, and kick the can down a few more months.
So what do you think the chances are that they raise rates, though?
I still think it's extremely low.
Very low. Okay.
And I would far rather see the Fed, and they're loath to do this, call out the impact of fiscal spending. And I'd love to see a more whole-of-government approach to fighting inflation. And what do I mean by that? Slow down implementation of the Inflation Reduction Act. Slow down implementation of the Infrastructure Act. Slow down implementation of unspent ARPA money. Because if you leave it solely to the Fed to fight inflation, we're going to have higher rates for longer, and it's having distorting effects and other damaging effects to the economy, I think, over the long run.
Secret sauce, and at the heart of this battle is TikTok's algorithm. It completely overhauled social media, captivated Gen Z, and it continues to keep them engaged better than copycat apps like YouTube's Shorts and Instagram's Reels. There you see, TikTok only second to Netflix here. It comes down to that source code, developed in China at parent company ByteDance, that serves users personalized content discovery and this very rapid feedback loop that determines what video is popular and can push it to more users in almost real time. This is also the biggest hurdle in a sale, if that does eventually materialize. And by the way, that's a big if. TikTok calling the bill unconstitutional this morning in a statement. But even if China could still withhold that source code through its export control list. And TikTok without the algorithm is a very, very different and maybe less valuable, well, most definitely less valuable proposition. Interested buyers like Steve Mnuchin has said that he would rebuild the app if there's no technology transfer. One VC I spoke to said Mark Zuckerberg would laugh at that idea. You don't think he's hired thousands of the world's best data scientists trying to replicate TikTok? And even then, I'll come back to that chart I showed you. TikTok is still winning. The TikTok algorithm itself is essentially a black box. There have been a number of studies trying to get at the source code. And while some have revealed its broad strategy and its impact, especially on minority groups and teens, none have been successful at uncovering the actual detailed workings. The company, like many tech companies here in America, keeps its algorithmic processes confidential as proprietary information. That is not to say, though, guys, that parent company ByteDance has made some concessions over the years, but they have arguably made America more intertwined and dependent on the Chinese company. In 2020, TikTok began using Oracle servers to address data security. According to UBS, it's now likely that TikTok is Oracle's largest cloud customer in the deal, worth a reported $1 billion. Now, the UBS analyst writes that a ban would be negative for Oracle's financials, quote, no sugar coating it, guys. So there's a lot at stake here. We're
going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, well, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting it more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence. And
very much a traditionalist. I like staying with the dollar. You know that from when I was there. It's make the dollar the choice. I hate when countries go off the dollar. I would not allow countries to go off the dollar, because when we lose that standard, that will be like losing a revolutionary war. That will be a hit to our country, just like losing a war. And we can't let that happen. And too many countries now are fighting to get off the dollar. And
Cryptoteacher and the New World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate. Not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Drama Team save the village. Part 2. King Yahshua and Grandma Tate save New York. From COVID 33, Part 3. King Yahshua and Grandma Tate goes to China.
It's mandatory to get Part 1, Part 2, and Part 3 of this series. It's time to re-educate Generation Z.